Today, we're going to be talking about how to use channel trading to increase profitability and, of course, probability with both Jeff Bierman and Don Kaufman. First of all, we are no longer advisors or a broker-dealer. We throw this up here briefly because both Jeff Bierman and myself, we had a long and prosperous career both at thinkorswim and TD Ameritrade before, of course, starting up TheoTrade. Here's a quick copyright disclaimer. This is ours. This is not yours. I also always encourage people to shoot us an email, support@theotrade.com. You can actually reach myself, Jeff Bierman. You can reach anybody. We use a universal inbox here. You can also give us a call. For everybody kind of tuning in, if this is the first time you have tuned in, welcome. Always let us know where you're joining us from. I'll let you guys know. I'm actually broadcasting from Scottsdale, Arizona. Jeffrey Bierman is broadcasting from Chicago. So he's right downtown Chicago. A little bit further here. Here's a bit about Jeff. I'll give a quick introduction, as I said, and we're going to jump right into it. Jeff is really one of the industry's leading technical and fundamental analysts. You know, I don't like to read this. I'm going to tell you a little bit about Jeff. Jeff and I actually worked together for about 8 years at both thinkorswim and TD Ameritrade. If you've ever been on the thinkorswim trading application, the vast majority of the studies and the entire setup and the feel, the look, the feel, the whole smell of thinkorswim charts pretty much comes out of Jeff Bierman. Jeff actually worked in my group for a lot of years also at TD Ameritrade after it was acquired by TD. He was the chief market technician of TD Ameritrade. Jeff's also an adjunct professor of finance at Loyola on the side. It's kind of a nice side gig for him. But Jeff's also run hedge fund in the past, so he's got a 26-year career inside of markets. A little bit about me. I'm the co-founder here of TheoTrade. Started trading in the late 90s in Chicago. I too have pretty tremendous experience on the thinkorswim trading application, although that is not going to be applicable necessarily to today's session. I'm a bit of an options geek. Jeff is a bit of a chart geek. I think that's the way of kind of looking at both of us. A little bit about TheoTrade. We specialize in education for stocks, options, futures, technical analysis, even trader psychology. We're founded by professional trading, and professional traders, educators, but everybody on our crew right now has a minimum of 15 years of experience. A couple of them, as we said with Jeff, 26 years into this. I'm just a kid at that point. And we're here really to first and foremost help you to mitigate the risks in the market. And if you've never, kind of thought about this term, mitigate risks, first and foremost, let's not get crushed in the market. Learn a skill set that can last a lifetime. Here's some of the instructors at TheoTrade. TheoTrade is by no means the one-trick pony. It's not like Don Kaufman. It's not Jeff Bierman. It's Jeff. It's myself. It's Doc Severson. It's Corey Rosenblum. It's Slim Miller. I mean, Slim, 40 plus years in the market. Started trading in 1974 at the Chicago Board Options Exchange, only shortly after it was founded. Last but not least, Tony Rago, who's our intraday specialist. So there are literally 6 full-time instructors here at TheoTrade. What you're going to learn in this presentation specifically today, two-way trading. So Jeff is going to bring up a lot about channel trading. It can allow you to be both long and short. He's also going to bring up uncertainty and mitigation and how the channel is really going to provide great entry and exit points. Additionally, packed on there, we're going to talk about risk management. Now, as Jeff goes through some of the technical setups, I'm actually going to jump in and I am going to provide the setup for the actual trade. It's all well and good to have a great technical setup, but you still have to be able to do what? You have to be able to execute. Execution accuracy, and we're going to build a big foundation for you guys in this presentation today. Something that, one of the most important things in these presentations, something that you can take away and use today, tomorrow, the next day. That's the reason that you're tuned in here for the next, hour. With that, a couple of key factors of success, and then we're literally going to be jumping live into the trading application, but we're going to be identifying the channel and creating confirmation via alternative indicators. Jeff, I'm just bringing him on live right now, and he's going to be talking about that. After we identify that channel, then we're going to go ahead and come in there and structure the correct trade to mitigate risk and provide ample upside opportunities. So Jeff, you're on, you're live. Let's get into it, Jeff. Let's start with this. I'll give you a quick introduction here. We've already brought up the thinkorswim platform. This could be done on any charting application. Why don't you start with telling us a little bit about the channel and a little bit about what you might look at, I should say, for a trade setup.
Good afternoon, everybody. This is Jeff Bierman coming at you from Chicago, and I'll take the handoff from Don and let you know, most traders that I've come across in my lifetime are not channel traders, and most, are probably trend or momentum traders, and that's not a bad thing. It's just a different type of mindset and a different approach to the way you trade. The thing about trend trading and momentum trading is it's fraught with all kinds of inconsistencies and guessing and a lot of margin of error. Channel trading is a different approach altogether, where your particular bias, whether it's legitimized or not, is not as what I call weighted or as important as the risk-reward trade-off in your trading. So you can take a look at GE for an example, and the first thing you notice about GE is like, hey, it was once at 1915 in January. Oh, look, it's at 1385 now in June. So there's been some good and there's been some bad, and it's chopped around in here. But the clear thing that people can see is, even without an indicator, it's got a downward channel trend. I mean, there's no doubt about it. It's downward, okay? But the thing is, as a channel trader, that doesn't matter to you. What matters to a channel trader is the risk-reward trade-off and pattern recognition. Now, you can look at this, and really there is no what I call repetition or pattern or recognition the way it's laid out when your eyes run from left to right, which means from top to down. So let me show you what a channel trader sees. First off, channel trading is looking at things what I call in a mostly horizontal fashion. Like, you can look around and see it's bouncing down and it's bouncing up, okay? Getting a fix on this and this volatility makes it difficult when it bounces around. So what a channel trader will do, he'll try to make what I call order out of chaos. And one of the primary, and there's a few of them, there's not 30 or 40, but there's enough out there, is I like to use what's called the price channel. And again, the word channel makes it very simple. I just go to the lookup, I look up what's called price channel, and I'll double click to add it, and it's set to a 20-day look back period, and this is what you see. Now, if you just followed the price action without the price channel, you could do that. But the price channel frames the actual price channel in terms of how it's moving in its ebb and flow. So at the top, whenever you see it flatten out, it just simply means that that particular stock, in this case GE, hasn't made a new high. So every time it flattens out, it looks back 20 days and says, well, if it moves down, it's made a lower low. Or at the top of the channel, if it moves up, it's made a higher high. But if you see it flatten out like here, or here, or here, or here, or here, or here, it just means that GE has, as Don says, has found a happy place. It's either crawling on the top of a channel or crawling along the bottom of a channel. So traders or technicians like to call this congestion. Congestion just simply means, in a supply and demand dynamic, it's not that it's going to explode higher or explode lower. It just means that an equilibrium's imbalance between buyer and seller. And the probabilities are that if it's at the bottom of the channel, okay, a lot of buyers are going to come in and push it up. But if it's at the top of the channel, it'll have just the opposite dynamic, where the sellers will have the upper hand and push it down. So channel trading is a way of positioning yourself, saying, look, I don't have to worry necessarily about where I'm going to get on like a trend trader. Trend traders suffer from, do I get in today? Do I get in tomorrow? Did I miss this? This is never about you missing a trade. This is about you looking at the probabilities of saying, could this go lower? Absolutely. But what's the probability of it going lower if the pattern tends to repeat itself? So you see how it flattens out here and there's a congestion pattern and it rallies? Then there's a congestion pattern and it backs off. And over here, another congestion pattern, could rally, it didn't. It made a lower low in the congestion to retest the low here. So that's the way channel trading works. Think of channel trading as not you chasing a trend or trying to figure out whether you're at the end of the trend or the beginning, because that timing is very difficult. It's not necessarily about the timing. It's more or less about you looking at the probabilities based upon pattern recognition of supply and demand and saying, and support and resistance, and saying, what is the probability of it going back up to repeat its pattern versus going down? So I'm going to put it in Don's hands for the moment and let him kind of walk you through it. And then we'll add an ancillary indicator to kind of show you how you can balance things out. So Don, why don't you kind of take it from here?
Yeah, one of the most important things to kind of grasp from here is that everything that we're doing is just trying to slip probabilities ever so slightly on your side. So Jeff and I, we tend to come from two different, I guess, elks. Is that a fair assumption there, Jeff?
You could say that.
Jeff is way more of a market technician. I've always been a much more quantitative trader. And what that kind of means is, everything I do is based on some probability, some mathematical formula. And, I've always fought with Jeff. I'm like, when it hits the line, I can't get bullish. But we come to a common ground with an area like the price channel. The irony specifically of GE is that yesterday we went through a couple of examples. A few of them we're going to provide to you today, okay, with a couple of trade setups. But yesterday we went through the GE example, and Jeff said, this is perfect. This thing looks like it's going to bounce off the bottom of the channel. We got ourselves a nice bullish trade. Of course, at times you roll your eyes, but lately Jeff with channel trading has been spot on, and he's going to use a couple of ancillary indicators to help us with this. However, and there's a big however, the chart isn't everything. Okay, the trade that we create, okay, is going to be as imperative as the directional bias that we are going to take. And we're going to use the trade in confluence, okay? We're going to use the trade itself in confluence with a strong directional bias to create, okay, a more complete strategy. So what we're going to do here momentarily is first, Jeff is going to take you into, on GE, he's going to add an additional indicator. Why? Because I don't think it's fair for anybody to go in here and, when you could pull up another indicator, why not throw some more of the probabilities in your favor? But moreover, it's just looking for pure confirmation. Then we're going to take it into a couple of examples where Jeff is going to provide the technical take. I'm going to provide the structural, that is the trade itself. Sooner or later, everything that you see here in the chart, you have to be able to execute upon it. Because for everything that you're doing on the chart, it's not worth anything unless you can execute upon the idea. And that's where I think today's session is going to differentiate from a lot of sessions you've been to. People, chart, it's just, as Jeff was saying, it's a trend. When do you get into the trend? Well, when it's your friend. When isn't your friend? When the trend is not any longer going your favor. The point being, nobody's telling you like, hey, this is your entry, this is your exit. We're going to give you a specific strategy. Jeff, with that, why don't you actually throw on an additional indicator, something that's going to give you a little more oomph than just the price channel?
I want to clarify something first. When you look at this channel indicator, by no means should you look at this and say, this is a predictive indicator. 99% of technical indicators have no predictive ability at all. They're a risk management tool. What this indicator shows you is effectively pattern recognition within a volatility framework. So when you're adding another indicator, the last thing you want to do is overlap. You don't want two indicators like measuring the same thing. You want to give balance to your perspective. So one of my favorite indicators is the relative strength index. Okay, all it does is it measures over a 14-day look-back period what's called the magnitude of gains against losses. It measures the strength of an underlying and whether that underlying might be peaking at a certain overbought level, meaning it's overextended to the upside and the sellers have the upper hand, or that it's oversold to the downside where the buyers, the demand side, will then have the upper hand because they've washed out a lot of the sellers. So when I looked at GE yesterday, Don's like, well, come up with some, things that you're following. I said, Don, nothing's better than GE. And he's like, well, why? I said, look, it spent 3 days at the bottom of the channel. And even if you don't have a background in candlestick charting, that's not a big deal. You could still just look at this and go, hey, look, it's a contained type of trade. It's also mimicking what you're seeing over here. It retested the 1261 level. And in technical analysis, it's very common in both directions to retest either a high or a low to see if it can hold. If it doesn't hold, then the idea is the trend extends in that particular direction, in which case this held for 3 days. It was just retesting, and that's normal. Then I looked at the RSI and said, look, it's coming off an oversold level. It's showing what's known as a bullish divergence. The price action's flat to going down, but it's gaining strength. That just simply means that most of the selling of the overhead supply has been washed away, so that if it does pop, notice how I use the word if, because if I said it's going to pop, Don will slam me. I don't know if it's going to pop. All I know is that if the probability is just showing that if it pops, okay, I've got a lot of upside room for strength to gain strength in that particular trend. So I said, okay, I'm buying off the weakness with the bullish divergence. The upper part of the channel is 1384 to 14 and a quarter. I recognize that. But still, when I look at this, I said, Don, look, 1275 to 14 bucks is about a 5 or 6 point move. That's a 5% move that could be achieved in a short period of time in a quick burst. And sure enough, it played out that way. So if I were sitting on your side of this particular, particular lecture and this coaching session, I would tell you right now, the RSI is one of my 3 or 4 favorite indicators. You don't have to make it yours, but it gives a nice balance. Strength, overbought, oversold against momentum, against volatility and pattern recognition. Only 2 indicators, Don, but plenty of balance. So you can just kind of roll with it and see if you can build a trade from this point on, if there is in fact still one left.
You know what, let's move on to another underlying, only because I think that in GE, I think that this this goose is a little bit cooked already, because the stock did pop back to the upside. And I'm a big believer, if you're going to be on the channel, you should probably be on one end or the other of it. Let's move on. Let's move to, a lot of people lately have been talking about something like gold. You want to move on to GLD?
Yeah, actually I do. Be aware, Don, that we've got to say this outright. GLD is an ETF, Don, so let's not confuse this with a future, okay? I'm going to say that right there.
All right. So first of all, Jeff's going to give you a little bit of a technical take, but we actually selected a number of trades both yesterday and this morning, trades that not only that we are looking at, but trades that we're literally taking. In a few minutes, I'm going to actually show you a couple of trades that I've talked about substantially in just the last couple of trading sessions. But I'm going to give you Jeff right now to give you more of a technical take before I go in and construct a trade. So have at it, Jeff.
Okay, now this is a tricky chart for one reason. Notice how the trend is still working its way lower on the bottom side, so the volatility is expanding to the downside. So the channel has not been, quote unquote, solidified. The upper channel is, you can see it tested, it failed, and it's gone flat. So whenever it's flattened out, that's when you can empirically make a judgment saying, okay, there is a channel on the top side, but you don't quite have one on the downside. But here's the operative word, just yet, because at some point, this will wash out. It will flatten out. So the idea here is you got to be patient. You got to wait a little bit of time, or maybe you could just take a little bit here and there and nibble on a trade. I see a channel down here. You can see right where my cursor is on the pencil in the left-hand corner at that 117 level. So my thinking, not my prediction, but my thinking is it might test this level to build a consolidation or congestion and flatten out here. I then integrate the RSI into my thinking and thinking, okay, do I see a bullish divergence? Is this getting stronger as this gets weaker? And the answer is no. This actually is showing remarkable weakness. So this could stay weaker for a few days, but once I see this turn a little bit and I see this tend to flatten out on the channel, it might just be an opportunistic trade all the way back to the 123, 124 level. So the upside is tremendous of maybe $4 or $5, but the downside still may suffer $1 or $2. But when you just flip the reward scenario, it's like $4 to lose $1. I like that 80% probability. But again, I'll leave it to Don to look at the option analytics side. I'm just giving you a technical take.
Yeah, you know what? First of all, I love looking at the gold trade because, for example, yesterday we saw some pretty heavy sell side activity in the overall market. And always the assumption, Jeff, is everybody will run to gold, except that's not gonna work anymore because we've got such a strong dollar. So there's kind of an interesting irony in that everybody is not per se running to gold. However, Jeff, I really do like these massively oversold conditions. But there's one belief that Jeff and I are going to differ on, and that is I don't like to hesitate. I don't like to wait. I'm actually going to construct an options trade in here, knowing that, number one, it's defined risk. Okay, so yeah, I'm going to talk about options. For those of you, if you're a little bit, new to the learning curve and you've not traded a lot of options before, that's fine. Okay. I mean, at TheoTrade, what we do is we educate. We've got all kinds of, basic options classes. But in today's session, I just want to spend time in the structure of the type of trade that I would set up. I'm going to go about 31 days out. The nice thing about GLD, because it's an ETF, because it's a commodity-based, ETF, I don't have to worry about earnings. I don't have to worry about a CEO getting taken away in handcuffs. I like it. And in this case, I'm going to use a very directionally biased strategy. I'm actually going to use what's called an in-out spread. It's one strike in the money, one strike out of the money. In this case, I'm buying the 118 half calls and I'm selling the 120 half calls against it. Now, I'm going to lock down the price over here and just do a little bit of an explanation. Now, I could fill this easily for right around 96, 97 cents. But let's assume for a second that we just paid $1 because it's just easier to talk about. I could take the trade. We can analyze the trade if that kind of does it for you. All right. The risk reward over here is very, very clean. And somebody might ask themselves, wait a second. It's a $2 wide spread, right? Because I'm buying the 118.50s and I'm selling the 120.50s. So it's a $2 wide spread. The most you can make on a $2 wide spread is $2, of which I paid $1 up front. Okay, plus transaction costs. So I had to throw that in there. Jeff reminds me of the old days back at TD Ameritrade. People always ask us, like, why did you guys leave TD Ameritrade? Because I said plus transaction costs 18,000 times in a 5-year period. You like that? That's the reason. It's called regulation. When Jeff and I were like looking at each other one day, we're like, why do we do this anymore? We just work for FINRA at this point, and we left. I mean, that's what it came down to. We left. So I'm doing a strategy in options where I'm literally like, I want you to think of this as a purist strategy. I'm risking $1 to be able to make $1. Right? Let's not worry about the profitability, the probability right now. I want you to think about just a very simple concept. People continuously complain about, I got killed. I took big losses. Okay. I want you to take things back, okay, to the very beginning. I want you to go out and I want you to construct a strategy where you're going to risk $1 to be able to make $1. Because in that way, theoretically, even if you flipped a coin up in the air, heads you're bullish, tails you're bearish, but if you're risking $1 to be able to make $1 after transaction costs and everything, even if you're right half the time, you can't get killed in the marketplace. And if what Jeff is providing you today, and what he provides in his courses, they're using a price channel, using an RSI, and if you spend some time with Jeff in learning this, if it could provide you the slightest probability in your favor, does that give you what we term positive expected returns? And the answer is absolutely. So even if you don't understand options, understand this. We're going out and constructing a strategy in options that cannot lose more than $1. You have the next 31 days, okay? Either the market's going to rally, the market's going to sell off in gold, we're going to laugh, we're going to cry, but you have the next 31 days to be right, to be wrong. There is no stop order in this strategy, okay? And we're going to let it fly, meaning that the full dollar will be at risk. And if what Jeff is doing has, okay, any positive effect on your trading, you receive a degree of profitability. And that's the first, okay, step in the right direction. In a marketplace where continuously people say, oh, it's efficient and it's this and it's that, and you come up with 50 reasons, okay? You could literally come up with 50 reasons like, I'm having a tough time in the markets. Why? Because you're going out there, right, and you're looking at a chart and then you're just praying that you're going to be right. Everything that Jeff is doing is to put the probability ever so slightly in your favor to achieve positive results. But the strategy that you're going to employ, the actual options trade, okay, it's everything to you because it's defining your risk, okay, in a world that can be extraordinarily risky. So that's the first example. Let's move on, Jeff. Where do you want to go to next? Because we pulled up some examples, and I've routed trades already in both Costco and Lulu. Pick your evil. You want to go Costco? You want to go Lulu?
Actually, I want to go Lulu. I think Costco is not done, but I think Lulu's close. So let's go Lulu.
Go for it.
Let me bring it up on the screen. Got nothing against it, Don, but I know that your wife's a big spender there, so I don't think that makes you very happy.
No, it does not, sir. It has nothing to do with the wife and everything to do with the $120 yoga pants that, with 3 little kids that just get destroyed constantly. Please don't even get me started down that track right now. So I would short Lulu on just general premise that I don't like the place, but give me some reason to want to short Lulu.
Look, you can't build a bias in because you don't like their retail prices.
No, I can't.
But if I could, go ahead.
No, I can and I do, but continue. I would like to add some evidence to that.
Look, if you want to take out your anxiety against this stock, here's the way I see this. Okay, I drew this before they came on the air. Okay, this is just a drawing. Here's what I see. Okay, I don't know if this is going to go higher. I don't know if it's going to go lower. But I let the market or I let the technicals dictate to me exactly what the crowd is doing. Here's what the crowd is telling me. Right across here, there seems to be a 122 to $129 range. This is just like a mini range within a wider range. Like here's the lower range down here at 104. Here's the upper range at around 130. So it's $26 here. But in this little mini range, it's very tight. So I can see that the volatility is extremely contained. I also know that it's the end of the quarter, so there's a little bit of performance gaming and chasing here. But what I'm not seeing here is I'm not seeing a breakdown or a breakout. I'm seeing a consolidation here, and I'm seeing a failure to break out to the upside, and I'm seeing sort of ground footing here. So this tells me the range seems to be intact. So where do I look next if the range is intact? Well, I'm looking for a breakdown in strength because basically the price action is going to lag the actual RSI Wilder. The RSI Wilder will be 2 or 3 days ahead of it. And here's what I'm seeing. Even though the price action's flat, not breaking down, the RSI is breaking down. You see how it's popped a little bit today, but there's what's called a bearish divergence. This is getting weaker as this is just trading flat. Technicians call that, you're on borrowed time. Something has to give one way or another. You also saw it here. You saw it here where it was going higher, then it flat, it had that big drop, and then it reasserted. But the difference here, between the difference here, is that even though it flattened out here, the lower channel didn't flatten out. It never went horizontal. So you are susceptible to range expansion here. Look here. This is no longer moved $3 or $4. This is moved $26 to $30. So much of the move has already been made. So if you're building a trade here to get short and execution is precision here, and let's just say you did it to 127 to 128, it could move $2 against you. But if you're right and this breaks even for a day or two on a pullback, you could easily see this drop $7 or $8 and just break free and leave it all the way to fill in this gap and go to the downside. So here's what I see, Don. I see a $2 to $3 upside. I see a $25 downside, and I see weakening price action. So if this gets a little weaker and this gives, the probabilities in your favor, not just to hit a single on this trade, but perhaps a home run. Think about that for a second.
So with that, there's a number of option strategies that I can obviously compile around it. I'm going to go in and I'm going to do, again, kind of the more purist play. I have tendency to agree with Jeff in that I like to look at risk reward. And when I look at something like Lululemon, I look at the upside potential versus some of the downside risk. Now, that's going to be relative whether I want it to be long or short. So that's one of those, I guess, quantitative measurements that I'm always trying to kind of approach. And by the way, there is not a perfect answer for that. What's the upside potential versus the downside, in here? However, if done correctly, again, as I said, I'm going to go in right now with a more purist approach. The more purist approach is without getting cute, without getting fancy, without getting crazy in here. All I'm going to do is construct, again, a $2 wide spread. Now, as Jeff was saying, and I'm going to go over here and I'm going to analyze the trade again. As Jeff was saying, there could be ample downside opportunity. Now, there's a few trades that I could build to kind of go after that ample downside opportunity. But to begin with, let's go back and let's go to the foundation of what you have to recognize in trading. People always running into the same brick wall, right? By the way, whether some of you guys know this or not, so Jeff and I, as we were saying, we worked at both thinkorswim and TD Ameritrade for years and years together. And one of the things that I specifically had access to is at the time that I was there, I left about 3 years ago. Jeff left about 2 months after me. So you couldn't live without me. I know it. Tell me the truth, Jeff. Anyway, Dead silence on that side.
No, my wife will take that question. I won't.
Anyway, if you take a look at this though, and I say running into a brick wall, we looked at order flow, and I specifically looked at order flow on 7 million accounts. And what people do all the time is they just, they make money, they take one large loss, and it sets them back. And if you've ever done that, it's the reason that I'm showing. I wouldn't call this back to the basics, but it's back to the foundation of structural trade. It's back to the foundations of logical trade. And the logical trade here is, and again, I'm just going to go right back to, this is a trade that you could route right this second. Okay, this thing is going for 98 cents. I'm actually bumping it up to $1 just to make the point. Risk a buck to make a buck. Risk a buck to make a buck. Can't get killed. Can't get killed, even if the stock explodes back to the upside. If you want more risk in your trade, sure. Okay, you can provide that. But listen, in Lulu, there's no earnings to worry about. It's through earnings. All right, there's nothing but decent volatility and the chance in this trade to make some decent money. Now, this happens to be a put spread. This is absolutely, without unequivocation, it is a bearish trade. And it's important that you recognize the bearish nature of the trade. Now, because I'm giving myself 31 days, it's 31 days to be right, 31 days to be wrong. You're going to laugh, you're going to cry, right? You don't ever have to bail out of the strategy. One of the things that comes up inevitably here is people ask me, well, what if it goes against me? Okay, so what? Everybody that's in options, they always look for, what's Don's fix going to be? I got a good fix for you. Take a car, drive it off a cliff, and bring it to a body shop. What are they going to tell you? They're going to say, that's a nice piece of junk. And I'm going to say the same thing about your trade after you've kind of people are like, oh, you can morph this trade into this. It becomes an amalgamation of garbage at that point. Okay? Route small trades, spray capital on a multitude of underlyings, okay, and think structure. Risk a buck to make a buck. If Jeff can make you more accurate in picking direction, that is going to be a feather in the cap towards profitability. That's the goal. I mean, today is using channel trading to increase profitability. All I'm doing is taking a very simple structured trade, okay, and edging it forward by using, okay, valuable technicals in here. So with that, that's my Lulu trade. By the way, if you want like a wide open trade where you're like, I just want to let this thing fly and I want to have, good degrees of profitability, you can actually open up a ton of strikes in here. If you open up a ton of strikes, I'd probably go out about 31 days and use above, right around here, these 138 puts. You could just buy the 138 puts. That'll actually give you the effective means of being short the stock without physically having to short the stock. But you'll have about $12 of risk if you wanted to do that. So it's just, that's a conversation that you need to have with yourself in terms of risk. What do you want? I like the risk to buck to make a buck. I also want to make the quick disclosure. I am and have executed into the Lulu trade. With that, Jeff, let's move on. Let's go to Costco. We're going to Costco.
You live there, man. I don't. So you're going to have to explain to me why you like paying membership fees and I don't.
Because they let me return diapers. So, listen, by the way, the third kid is almost out of diapers now. So, once the third kid's out of diapers, what good is the Costco for me anymore? That's when I say they got good stuff there. Yes, and we do live there. I mean, it's Scottsdale, Arizona. It's a good place to go to Costco. I don't know. When all else fails, 110 degrees outside, head to Costco. Give us the technical take on here, because this one, this is one of the stores that you shop at all the time, and while you're checking out, you're actually shorting the stock. So by all means.
So here's my technical take on this with the price channel. Again, we're looking back on a 20-day sort of what I call cumulative period here. Now, you might have thought to yourself, hey, this is a good time to short right here. And it did, but it never got to the bottom of the channel. Or this is a good time to short here because it's flattening out, but it didn't get to the bottom of the channel. What do these lack that this now has? And here's your answer. You didn't quite get fully overbought. You see, over here, it was showing strength, but the strength hadn't maxed or topped out. That's up here. Over here, similar situation. Over here, similar situation. You see, when this bottomed out over here, and I mean really bottomed out, it tagged the lower band. Here, when it really topped out, it tagged the upper band, went through and came through. Not once between here and here has it really tagged. The closest it came to was here, but that's just not even close at a 64. You need to get to 70 or higher. This one has over exceeded my expectations, meaning it got to about that 76. But here's the thing, and this is a good time for Don to build a short trade. Look what's happened. Even though the top of the channel hasn't flattened out, it seems volatility is still expanding upward. There's what I call a canary in the coal mine. There's a red flag. Here's your red flag, people. This is going lower as this is going higher. All you need is 2 or 3 days of this to flatten out, kind of like where it seems to flatten out on the bottom lower channel here, and you might have a phenomenal opportunity for a trade. And the one thing that catches my eye today, you're on a window dressing. You're on a big update to chase performance, and this has been a winner. It's at a 52-week high. What do you notice? The stock is actually down for the day. Has it peaked? Maybe. But as a technician, this catches your eye, but the clincher or the confirmation comes from the reversal of the RSI, weakening as it's going higher. That's your leading indicator. That's your lagging indicator. So Don, if I were to build a short here, I'm looking on a top side of about a 212, 214, but there's a lot of air down to that 195, even to 200. So the risk reward in this one is absolutely phenomenal. But again, patience in working the order to make sure you get that probability right. You have time here. You don't need to get it done today, Don, but in the next day or two, my assumption is it's probably going to run away from you.
Yeah, you know what? So Costco is one that I'm going to provide an example on, but I also want to be very specific. This is not an example. It's also a trade that we happen to have put on. Costco happens to be a product that over the years I have traded rather actively. Interesting irony there, Jeff, is many years ago, you probably don't even remember it, but you've always been into retail stocks. So somehow spending, 3-4 hours a day with you kind of got me into retail stocks. I've been tracking Costco evidently ever since. So inside of Costco, I'm actually going to take you specifically into one of the trade ideas that I happen to have on currently, and I'm going to lock this price down. So this spread's a little bit different. I'm going to come over and I'm going to analyze the trade just so you guys get a quick glance at it. Once again, it's a bearish trade. Now, there's a number of reasons, okay, that I like this particular bearish trade. One of them being precisely what Jeff showed, which is there's a divergence, if you will, in the force, and that happens to be we're at the upper end of the channel. As he said, the RSI, though, is diverging a little bit lower. The other aspect I really, really like inside of Costco is it's showing weakness today in a marketplace that's actually bouncing back higher. So with that, this happens to be no more than a $2.50 wide spread. Now it's the same logic as risk a buck to be able to make a buck, but I'm able to buy this thing right now for right in the neighborhood of about $1.15. So with $1.15 at risk, well, what's the upside potential? The most you could possibly make on a 250 wide spread is $2.50, of which you paid $1.15 up front. So you have a little bit more upside here. And again, the structure of the trade lays out identically, okay, to the trade in Lulu, lays out identically to the trade that I would do inside of GLD, lays out identically to what I would have done inside of GE. By the way, I also have positions in GE, I have positions in Lulu, I have positions in Costco, all of the above. Okay, this is precisely how I structured the trade. The one thing that I recognize inside of Costco is that, sure, the downside could be quite spectacular, but at this point, I actually want to go out and the market's starting to pick up in terms of volatility, and I want to go out there and I just want to scrape off very small profitability, okay, in a wider array of underlyings. The opportunities right now are so plentiful. I mean, I couldn't even begin to shake a stick at all the different opportunities that we're finding right now for the use of these spread types against the channel and against the RSI. So it's not, great. There's huge, potential in this thing, but it's not necessary for me to extend myself into any extraordinary risks. I think it's actually appropriate in this case to go out and do a contract, do 2 contracts. I mean, at 2 contracts, what do you have? $230 at risk, okay? When you're not worried is when you're going to make some of the best decisions that you've ever made. Again, a bearish trade in Costco could be great. I think we got time here for one more. Why don't you cruise over to, you want to do AT&T?
Yeah, AT&T is a great setup. I mean, I don't think it's going to be here for very long. Notice how it's down today because it's had an awful quarter. It's had an awful time. One of the things that bothers me about this is the fact that the what appeared to be a flattening of the price channel is actually expanded a little bit lower. But then again, this wasn't oversold enough to really get me to buy it. Honestly, if I'm looking at something like this, here's what I'm thinking. It's probably going to retest that 31.17. So there's no reason to even have to necessarily build a trade immediately today. You could wait to tomorrow if you wanted to. You probably wanted to get a little bit more oversold so you can see some of that bullish divergence action like you saw here. Look, price goes lower, the RSI gets stronger, and then it's off and running. Top of the channel is 34.53. That hasn't changed. It's a 20-day look back. My assumption is it probably stays there for another 3 or 4 days, as it probably will. This might find its way to 31.17. But Don, if you're not splitting hairs, okay, and you're thinking you're within that striking distance of 31.17 and you can work an order, I would like to see this get a little bit lower, but my thinking is down to 31 is the risk, but the upside is to 34. Still puts you in about a $3 upside and about maybe a 50-cent downside. Still a good risk-reward probability, but you might be a couple of days early, but you can see clearly I'd like to see this go lower and tag. So that's the way I look at this.
Yeah, I like it. You know what? I'd rather be in it than sit there and be late. So I mean, again, as a trader, I'd rather be early than late, and trying to time a stock that's likely to bounce back up, and that's, hey, let's call it what it is. That's exactly what we're looking for over here, is a stock that's going to actually rip a little bit higher. AT&T provides some interesting attributes. Number one, sooner or later, people are going to look at this and they go, wow, 6% dividend yield. Yeah, 6% dividend yield. You getting 6% on your money right now? Okay, so there's many different reasons to be looking for a bullish style trade in here. The last earnings period is not going to be of concern. Obviously, the underlying had gapped down. Now, again, there's a number of ways that we could create a bullish setup. I'm going to go right back, okay, into the same idea that we've been doing again and again and again and again, and that happens to be the idea of these in-out spreads. So when I start to construct, again, the spread in this particular context, okay, I do have to worry about things like dividends. A moment ago, somebody said like, hey, why don't you do this or why don't you do that? And, you could sell a spread instead of buying a spread. And I got to tell you, you got to be extremely careful. You sell a spread where there's big dividends, you are going to pay dearly. The other thing is volatility is currently and inherently low right now in the market. Even after the volatility picked up yesterday, volatility is still extraordinarily low. So with this, you got to know something about AT&T. It doesn't move very much, okay? And when it doesn't move very much, you have to get a little bit innovative, not too cute, but innovative. Here, it's just a $1 wide spread. Now, you're actually going to go out, you're going to buy something for a 49-cent credit. The most you can make on it is about 50 cents. So you're risking 50 cents to make 50 cents. But who cares? Be Captain One Lot. All right. And when I say be Captain One Lot, fire a one lot. You want to learn this business? Risk $50 to be able to make $50. It sounds easy enough, doesn't it? Now, again, the commissions. Everybody go, well, what about commissions? We have negotiated commission rates. I'll talk about that here momentarily. But it's just imperative, again, that we go back to the structure of the trade. Because when you think about everything in this business, okay, and some of you guys are brand new, some of you have been around for years. When you think about this business, what beats people up, okay, is the amount of risk that they take in any given position. They're out there and they're swinging for the fences. Again, my job is to take you back to the structure of the trade, to take you back to the fact that you only have 50 cents at risk. Once we get that down, we're going to be much better off. In addition to it, add some technicals. If that's going to help you get edge, if that's going to help you give you the extra oomph to get you over the hump and give you the probability, okay, and the direction to profitability, then so be it. And that's what Jeff is excellent at ultimately doing. So we kind of covered, we covered a lot of different examples over here. We kind of covered quite a bit and gave you guys some food for thought and a couple of trade examples. Again, the key factors of success today and what we really wanted to cover. We think we did a pretty good job of identifying the channel. Now, there's a lot of different channel indicators. Jeff could have used a Dashin channel. Questions came up. Can I actually do this in a scan? Absolutely. Could it be a Dashin channel? Sure. Okay. I mean, the specific channel that Jeff uses, that's the kind of stuff that we reserve. That's the kind of stuff that we say, okay, that's getting more into criteria, right? And I'll cover that in just a moment. In addition to it, we structured the correct trade to mitigate risk and yet provide ample upside opportunity, okay? And that's what we're trying to do. Here's a couple of recent trade examples. Now, I threw these together. This is stuff that Jeff, all right, and I have discussed extensively, okay, in kind of constructing a channel course. This is actually a recent trade. By the way, the trades that I'm saying that are recent trades, these trade examples were live trades. This is the actual execution time. It's based on Pacific time. All the trades that I'm actually mentioning were either done on evening videos, where I actually broadcast in the evening video if you tuned into any of the evening videos, or these were actually broadcast live within the TheoTrade chat room. This is one on Macy's. M is for Macy's. I actually bought an in-out spread. This happens to be a $2 wide spread. Bought it for 97 cents, sold it for $1.42. Here's the irony. I bought it on the 12th. I sold it on the 14th, right? So it's the opening and the closing of the spread. Next, also based on this, is this recent enough for you? I bought this on June 18th, okay, for $1.25. I actually sold it on June 25th, which was yesterday, for $1.92. Again, also based on Jeff's upcoming channel trading course. XHB, what are we looking at in terms of XHB? Well, in terms of XHB, if you're not familiar with this, it happens to be none other than the home builders. Home builders, when do we actually open the spread? Okay, here we are on June 15th, opening up the spread. When did we close it? Ironically, yesterday, another bearish trade. Okay, all three of these recently, and again, these are the most recent examples. I've also got trades on the QQQ. Again, I could go all day long about some of the recent trades that we've built, and it's been very specific to Jeff's channel. And again, if we're going to go out and we're going to deliver a class, we're going to do it based on live trades. The secret of all this is kind of in the sauce. And a lot of people, they're asking the right questions in here. Okay. By the way, first of all, yes, this is recorded. Everybody's asking the right questions in the chat room right now here on GoToWebinar. They're saying, you know, which channel do I use? Which RSI? What time frame? You know, what's the actual setup? How do I actually construct the option trade? And that's where everybody looks and they go, I could read about this anywhere. We spent years fine-tuning this stuff. Again, Jeff and I have spent, you know, the greater part of, well, it was 8 years at thinkorswim and TD Ameritrade. Now Jeff's actually been at TheoTrade for, he's coming into, I think it's 2-year anniversary. But we spent just years fine-tuning all of the stuff and fine-tuning the trade setup. And the trade setup really comes down to, if you want to learn more about channel trading, we have a class. In fact, Jeff is going to be doing it live this Thursday. But there's a lot more than kind of meets the eye than just the class here. So bear with me for a moment as I actually take you through this. Jeff is going to do a class specific, okay, to channel trading. It's called Passages to Profitability, a comprehensive guide to channel trading, okay? Jeff's the instructor. That class will be done live and it will be done during market hours, okay? That is this Thursday during market hours. Of course, the class is recorded and the slide deck is available, okay, for download. But the course, it's part of what we're now doing. We have completely restructured, okay, how we actually, all right, provide courses here at TheoTrade. And give me a moment to go through this because this is one of the key elements, one of the key differentiators of now TheoTrade. What we do is we charge you $99. Go to theotrade.com/all. But for $99, we give you access now to everything. Like a bunch of people go, oh, is there a scan for this? Of course, right? You want it? $99, you go in there, okay? You want to see the class about how to trade options around this? Great, there's a class on that. We got it. We got you covered. Jeff's class isn't $99. Everything is $99 because now we do unlimited monthly streaming membership. So we've changed everything. So even if you've been to a webcast in the past, you haven't seen this, okay, because it's brand new. We've been around now. We're actually moving into our 3rd year of anniversary. And we have enough classes. Well, I'm going to show you in a moment. We have over 70 classes under our belt. We have the capability now, stream them all. Okay, 6 instructors working full-time, providing multiple classes every single month. Jeff's class is one of them. Jeff's class is going to be absolutely phenomenal this Thursday. By the way, here is the curriculum. Okay, this is the actual curriculum for the class. Now, in a minute, I'll take you to theotrade.com/all. But the curriculum, Jeff's actually going to talk a little bit about, again, really discerning, all right, aims and temperaments, different types of short-term traders, distinguish between channel traders and other types of short-term traders, define basics of channel trading, horizons, risk, reward, okay, really some of the all-purpose rules of channel trading, okay, applying and really defining some of the rules, okay, deciding again on a channel technical indicator that's adopting a secondary indicator along with it. And it just, again, I think you guys will appreciate that it'll get you into and really develop your own trading discipline and habit in here to be used in conjunction, okay, with like that principal trading strategy. So that's a little bit about passages to profitability. And please write down, the class is live this Thursday. It's not on demand. He's going to do it live, okay, on TheoTrade this Thursday. It's going to last, okay, if I didn't mention it, it's about a 3-hour class. And again, it's all recorded. It'll be available immediately because not everybody necessarily can be there live. Now, a lot of you get tired of this. You know, you've been there, you've done that. People, okay, if you've tuned in to a ton of different paid classes and indicators and secret squirrel like black boxes, okay, we've kind of had enough of that. So we started doing this all you can eat. And what I call all you can eat, it's unlimited streaming. You know, you don't have to buy one last thing over here. There's the wait, just buy this indicator. It gets ridiculous. So we've had enough of all the educational garbage and all the educational sales pitches, and we're going to intend to put an end to it, and we're going to disrupt financial education. So we're introducing what's called unlimited streaming monthly membership. And what unlimited streaming happens to mean is just that. We literally let fly. When I say let fly, it's $99 a month. There's no contract. Everybody asks that. There's no contract. I don't care. You know, we want you to be a member here forever. We're always coming out with new classes. That's imperative. We keep coming out with new classes. But the guide to channel trading, it's included in this. By the way, what else is included in this? Everything. We have 70 classes available immediately on demand. Start watching them. New monthly classes. We don't stop. We just keep doing it, right? Think of this as the Netflix, if you will, of trading. We don't stop. We're always going to be adding better classes, more instructors. By the way, speaking of more instructors, okay, we're in the midst right now. We're in a little bit of an expansion phase here at TheoTrade, and you guys are really going to enjoy. We're bringing on all kinds of new instructors, okay? We have a live trading chat room. By the way, all this is included. A live trading chat room, okay? It's live right now. In fact, I could even bring it up here momentarily if you guys don't mind. In fact, I will do that. We broadcast 5 hours per day. We have 57 proprietary indicators and scans. We email you out trade ideas. So we're going to email out trade ideas. We have daily coaching sessions with timely topics. Guess what? Our number one presenter for those daily coaching sessions is none other than Jeff Bierman. Instructors, answer emails, answer trading questions. It's all encompassing, okay? Take a look specifically at this site. Okay, this includes the class that's coming up. It includes everything that we do. So streaming option classes, streaming, monthly classes, new classes. Here, let me show you one other aspect of this. Okay, and again, it's theotrade.com/all. What you guys are currently looking at right here, right now, this is live. Okay, when I say this is live, Watch. We'll refresh really quick. And as I start to refresh, okay, this is live in the chat room going on this moment. And all of this, okay, happens to be our clientele live in the chat room. We have an individual that's actually calling out Nasdaq futures trade live inside of the chat room as we speak. But TheoTrade, it's way more than that. You go into the class archive, you're going to have access, as I said, to every single class. Now, some people are brand new. If you're brand new, guess what? We have an entire tab called Start Here. That'll take you through like, hey, I don't even know what an option is. I don't know what a stock is. Options 101, 201, 301, order execution, what products to watch and why. Do you think it's worth $99? All right, you have to be able to answer that question, not me. Okay, go into the class archive. If you name a topic, it is in here. How about this? Even trading psychology, provided to you by none other than Doc Severson and Slim Miller. It's all part of it. And if you think that this is a little bit overwhelming, we agree. But we would rather you overwhelmed rather than underwhelmed, okay? You got to check this out too. The 5 essential building blocks to successful trading, that class alone, okay, used to sell for over $1,000. That class alone. Come in here and stream it. All right, it's a 5-part series. Again, there are phenomenal amounts of archives in here. There's actually over 6,000 hours. All of the content within TheoTrade under member home, it's all searchable. All right, you can come in here and you can actually type in, for instance, spreads. You want to know more about spreads? We have your answer on this, scanning for in-out spreads in today's markets. Right? Again, you name it, we've got it covered and for you in there. Again, the entire thing here, it's $99 a month. Again, there is no contract. It's TheoTrade.com/all. I also encourage you to email us, to call us. I'm going to answer a few questions. One that always comes up, people constantly ask me about, well, you said you have a discount for brokerage firms. We do. There are a number of brokerage firms that we work with. Okay, that's something that you have to actually ask privately, okay, in the Q&A room. We have a number of phenomenal commission structures. The one thing I will tell you, the best commission structure we have negotiated here currently, okay, currently at TheoTrade is, well, there's two major firms, one of them being, of course, TD Ameritrade, which uses the thinkorswim platform. So if you already have an account, at TD Ameritrade, we can get your commission schedule adjusted. You have to be a member, in effect, to do that, to qualify you for it. And it says that, again, directly in here. It's TheoTrade.com/all. Next question people ask me is, I can't get approved for options to do this. We can help you with that. Every trade that we discussed today and every trade that we discuss here at TheoTrade, for the most part, can, in fact, be done in a retirement account. So that comes up all the time over here. So you can trade this in your retirement account. What else you guys got? Oh yeah, somebody said, what if I'm on vacation? Sign up for it right now and just let us know when you're going to be on vacation. It's the easiest way to do it. Just sign up right now and just let us know when you're on vacation. We have people do it all the time. Like, I'm going to be gone. I'm going to be gone for a week. I want to make sure. Listen, it's only $99. We're not going to break you. You know, by the way, we don't sell any, like, here's another class for $500. Here's another indicator for $500. I don't think I even showed that, but I want to talk about indicators. Okay. We have unbelievable proprietary indicators. We have some of the best scripters in this industry. By the way, bar none, okay, I'm going to actually go out on a limb and say we do have the best thinkorswim scripters, because most of the people that wrote the scripts over here, they worked at thinkorswim. So newsflash, most of these scripts are actually written by people that were at thinkorswim, including myself, Jeff Bierman, and a few others that shall remain nameless. But we have an unbelievable array of scripts in here. We do not charge more for that. Like, it's part of the project. It's part of the deal, because we think that trading needs to be all encompassing. You know, it's not fair for somebody to, like, hey, here's another $50, here's another $100, $500 for this indicator. Got to stop all that crap. It's TheoTrade.com/all. I also want to leave you with this one thought. Channel trading, just a portion of it. I think you guys will really enjoy the class this Thursday, okay? However, some of you might want to trade intraday. We have that as well. We have an intraday like trading that's going on all throughout the course of trading sessions. If you're not sure what genre of trading you fall into, spend some time with us, okay? We'll actually help you and we'll help accommodate. If you work for a living, okay, and you're at work throughout the course of the day, first of all, what are you doing listening to this? And secondly, if you're working throughout the course of the day, it's absolutely fine, okay? Many of the trade ideas that we email out are much more hands-off, similarly to the trades that I emailed out today that were on both Costco and Lulu Lemon. With that, I want to thank everybody for coming, joining us today. Please shoot us an email, support@theotrade.com. Enrollment is theotrade.com/all. Again, it's just $99 a month. There's absolutely no contract over here. Thanks everybody for joining us this afternoon. We'll be here for a few moments to answer a couple more questions. With that, though, have a wonderful afternoon. Bye-bye.